When a pipe bursts inside a condo wall or a major storm rips the roof off a townhouse, everyone immediately asks the same question: who pays for this? Is it the owner's personal policy, or does the HOA's master policy handle it? The truth is, community association insurance is one of the most misunderstood, complex, and potentially expensive topics in real estate. Today, we're stripping away the jargon to bring you the facts. We're joined by an industry expert to break down the massive risks of cheap policies, why your maintenance rules don't match your insurance rules, and the number one claim that catches boards completely unprotected. If you own a home in an association, this episode could save you thousands. Welcome to Let's Talk HOA, the podcast giving you an inside look at the world of community management in Lake Norman and beyond. Presented by Main Street Management Group. We're your source for relatable stories, expert information, and a transparent look at the industry. So if you're ready to get the inside scoop, kick back, grab a coffee, and let's talk HOA. Welcome back to Let's Talk HOA, presented by Main Street Management Group. I'm your host, Kelly Hawkins, and today we're tackling a heavy but critical topic: insurance. Joining me is Chuck Kiser, Senior Vice President of IMA Financial Group, who specializes in HOA condominium and townhome community association insurance. That was a mouthful, Chuck. So welcome to Let's Talk HOA.
Yeah, thank you for having me.
Yeah, tell me a little bit. I've known you for many, many years, but tell everyone else a little bit about your background.
Yeah, going on, I think 12 years now, which is when I started with the firm. Prior to that, I was an underwriter at Hartford Insurance, joined the firm back in 2015. Got hipped up with a guy by the name of John Kettner, who is kind of my predecessor and an industry expert in the HOA world. He trained me. Obviously, we formed a great relationship, work with you, some other local property management firms, and just try to do the best we can to take the mystery out of the insurance buying process for the HOA clients.
And I really appreciate that. Like, we love to work with your firm because we have clients with other agents. And I literally never hear from them ever about anything, except for when they have to tell us something is going to go up. But you and I talk almost weekly, definitely monthly, and you're always letting us know what's coming. We can come to you about questions we have. You're welcome, speaking to the boards and the homeowners. So I really appreciate what your firm brings to the table. So I want to talk today about what makes HOA insurance so complicated. It is something that is hard for the managers to wrap their head around, definitely hard for the boards to wrap their head around. And then when you have a claim, the homeowners do not understand how this works or why we might push things back to them, or they get to make the claim. They have to try to make the claim on their insurance first. Yep. It's all kind of complicated. So not a very sexy topic for sure, but it's critical to running an HOA. So I was hoping today we can kind of make it easier to understand for everybody.
Yeah, and I think the mindset to go into it with is everybody that's involved in the insurance buying process, for the most part, has good intentions. The board does, the management company does, the agent does. Where it gets flawed is where people have learned how to buy insurance, I think. They've been taught that it's a transactional event, and I think brokers like myself can be to blame for that. I think we've trained certain clients that you address this once a year. We reach out, we give you a price, and you find somebody to compete with that price, which is really the wrong way to think about it. I'd think about insurance brokers like you think about your CPA or your lawyer or your doctor, or even your management company. You're interviewing and hiring an expert to represent you in the insurance marketplace and make sure you're adequately protected. And when you interview that person, you shouldn't be interviewing them based on the merits of pricing, but whether or not they're an expert in your field and can they provide you with the best product for the best price.
One of the things I hear boards say all the time, I don't think they understand the difference between the agent, which would be you, and the carrier, right? So you're going to manage their insurance for them.
Correct. Yep.
Yeah. And they don't understand how important that relationship is. And when they think, oh, I can get this done cheaper, they go out and start shopping agents, not carriers. They're doing it all wrong.
Yeah.
Right?
Yeah. So it's a twofold thought process, right? I think the first thought boards have is we've got to 3-bid everything. We 3-bid our landscape project. We 3-bid a construction project. We 3-bid the insurance. And that's fine to a degree. We'll get deeper into that as we get in the podcast. But it really can lead to some problems when a board says, I've got to get 3 bids, and they go to 3 different agents. So I think to answer your first question, the insurance company is ultimately who you sign the contract with. They're the ones that pays your claims. They're the one that provides your policy. Your broker is how you access the insurance carrier. And that's me, so the middleman, really. And there's 2 different kinds of brokers. When you think about a State Farm or an Allstate, they're what's known as a captive broker, meaning they only work with that one insurance company. Yeah. And that's not a good thing or a bad thing. It's just one model. The other model is the independent insurance agency model, which is what we are. We represent many insurance companies, and our job is to, based on what your business is, so in this sense, an HOA, pair you with the best company that's going to give you the best terms and hopefully a really good rate. So that's kind of takes the mystery out of the insurance buying experience. When you come to me and you say, Chuck, I need 3 bids, initially my feedback's probably going to be, if you're hipped up with a good carrier that's really good for your class of business, otherwise an HOA, you don't need 3 bids unless the carrier has done something to maybe not wrong you, but they've taken a large rate increase, or they've, it's just something that doesn't make sense to you or make sense to us. And that's the initial feedback, because there's only so many carriers that'll insure HOAs, I think, as we both know, especially condos and townhomes.
Especially now after the Florida incident.
Correct.
The towers crashed. Yeah.
So you really want the market to be available to you when you need it.
I think people don't understand too is 3 bids are great, but insurance products are not apples to apples, right? Yeah. So you may have something, it doesn't include codes and ordinances. It has a wind and hail deductible. Like, you need an agent. You need a good relationship with a good agent so that they're shopping those things for you and they're watching for those pitfalls. Yeah. Because you just go ask for 3 bids, you don't know what you're comparing, right? Yeah.
So when you choose that broker that is the partner, right, and they have access to multiple markets, it's their job to go out and say, this is what you have now. This is what we think may be a better solution, and why we think it's a better solution.
The other thing that's important is that you want to make sure you have an agent that does HOA insurance, right? And I think one of the things that we're seeing now is management companies getting their own agent.
Yeah, so it's tricky, and I think me and you both know there's multiple models to that. There's either a model where a management company may say, hey, we've assigned you broker XYZ as our broker. In some way, shape, or form, if you place this policy for us, you're going to give us a kickback. Mm-hmm. Other management companies will either hire one to be on staff, a broker, and try to run everything through the management firm. And then there's certain firms that are private equity backed where they may own an insurance arm, own a management company. And whether it's in the fine print of the contract or not, I don't know if the boards always know that their dollars being spent funnel up to that same company.
Right. Because you may have access to 15 carriers that can provide a bid, and they're down to 3 because only 3 give them any kind of revenue share. Only 3 give them market access because they're not an agency. Yep. They're just a person sitting in a management company office. Yeah, I think that's that's hidden, right? That's one of those hidden things about the industry.
It is, and I think there is some importance to having your financial interests separated, because if your ultimate goal is to increase revenue, not always, but many times it can lead you down a path of, are we doing the right thing for the client, or are we trying to make our revenue go up?
Yeah, absolutely. The other thing I think too, when you have a really good relationship with an agent, is you get claims advocacy. I mean, I know we have to deal with the claim with the carrier, but I know there's times when we're like, I can't get through, this is slow. And I've always reached out to you, and then you guys jump right in and try to push it through for us.
Yeah. So that's a good point. And there's different arms of the insurance company, right? There's underwriting, there's financial arms, there's the claim side. And all of those entities within the insurance company try to talk. It's not always the most efficient process. So having someone that can jump in when there's a bunch of insurance jargon and an email chain that's got 50 emails in it and say, hey, can we take a step back and maybe make sure the client is getting the best outcome here? That can make a big difference.
The other thing that I think you and I've talked about in the past is when they're shopping for insurance, the cheapest policy versus building a program. And what I mean by that is you've had a big claim, right? And then you go out and you try to shop the insurance because your premium went up because you had a catastrophic claim. And then you get a cheaper deal, but the program would work better if you had stuck here. Maybe you pay more this 1 year, but then you have ways of working that out so we can stay on better insurance, but get a lower premium in the future, not just jumping to the next lowest premium with less coverage because they're going to dump you in a year or your premium there is going to go up in a year. Am I saying that right?
Yeah. So it's kind of like what we talked about earlier, right? There's a finite amount of carriers that'll insure HOAs. You want to build some history with a carrier. So when you do have that claim, they don't have a knee-jerk reaction and skyrocket your premium or non-renew you, which makes it harder to find insurance. You don't want to go out to the market every year because, believe it or not, insurance companies do keep a file. And if your file says they come to us every year and they come to us via 6 different agents, which, by the way, only one agent can submit you generally to each insurance company, the insurance underwriter starts to think, we're never going to win this business. Why should we keep participating in this process?
Or the claim, as soon as they have a claim, they're going to dump us.
Yep.
Yeah.
Mm-hmm.
So that leads me to the last thing that I wanted to mention for board's perspective that they need to think about was D&O.
Yeah.
Like you and I talk about D&O all the time. It's written into my contract, a very specific kind of D&O. I know I call it good and bad D&O, and you don't like me to call it that, but
well, it can be.
So why don't you explain what D&O protects?
Yeah, so D&O, it actually protects multiple parties. It protects the HOA, so the big name that's on the policy, and done correctly, it protects the individual board members and potentially even their spouses and or families. Because what happens is when there's a lawsuit, not only is the party that's alleging a wrongful act, they're not only coming after the HOA, they're coming after you personally.
Yeah. And we all know, and we've seen many times, that you don't have to be right to sue the association.
No, anybody can file a lawsuit for any reason.
Yeah. And even though you're wrong and you would lose in court, there are a lot of attorney's fees that happen before you ever get to court.
Yeah.
And if your D&O insurance kicks in, their goal really is to settle because going to court is very expensive. The attorney's fees to go to court are astronomical, right? So if they can pay out $50,000 for this homeowner to go away, even though they're wrong, they will.
Yeah. So when you buy an insurance policy, you transfer the risk you have to the insurance company and you effectively make them your negotiator. They agree to pay your claims based on the premium you pay. And if they can settle a claim for $10,000 versus going to court and spending $50,000, that absolutely makes sense.
Yeah, because they're only thinking about the money. They're not thinking about the right and the wrong and the homeowner's stupid claim sometimes, to be honest. So good and bad D&O. In my mind, good D&O not only covers your attorney's fees in that situation, but a lot of times you have to realize that when they do make that settlement, you have to have the funds available in your insurance claim to pay the settlement,
right?
Not just your attorney's fees. And then some D&O will not cover you if it's a non-monetary claim. So if a homeowner puts up a fence and the HOA says take it down and they sue to keep the fence, they don't sue you for money, that's not covered in some D&O. Right?
Yeah. So what you call good and bad D&O, which is a good way to simplify it, we call limited endorsed form or monoline D&O, meaning it's its own policy. So the limited endorsed form is what you buy the package product, right, with your property and your general liability. There's just a tack on that says, hey, we're going to cover you for some wrongful acts. That's an efficient option. It's not always the broadest coverage. It's meant to be a quick way to add D&O to one policy. The other option is the policy you mentioned, which is the monoline policy. There's certainly products out there that are geared for HOAs and their board specifically. And yeah, they do cover things like the non-monetary relief where you're sued for an actual item versus money. The other things they do is they'll cover things like discrimination, which is important in today's society. And then you got to think about your defense costs, right? We talked about lawyers' fees. A good D&O policy, the defense costs are going to be outside the limit of insurance, meaning if you buy $1 million policy, that $1 million, if it's inside the limit, can be exhausted by attorney's fees. If it's outside, you retain that $1 million for claim settlement.
Right. Good D&O. So we that's in our contracts. I know we make sure that all of our clients have the good D&O. The other thing that I want to make sure that boards understand is that as soon as you're threatened about a lawsuit, you should reach out to the carrier, even if you haven't been sued yet, right? Why is that?
Yeah, so you have a duty to notify the carrier as soon as an item may evolve into a lawsuit potentially. So the reason carriers want you to do that is because they want to handle the defense from soup to nuts. They don't want 3 months of action to transpire, and then you say, oh no, this is going to turn into a $50,000 event. Let me go to the insurance carrier now, when it could potentially be a $10,000 event for them.
If they'll just settle it out.
Right, settle it or get a better outcome somehow. Yep.
And then the other thing, too, is if you're not with us, you should check your obligations to the management company.
Yeah.
Because almost every contract says you have to indemnify them. So management companies don't make the decisions. Boards make the decisions. Management companies execute them. But when you're getting sued by a homeowner, their attorney is going to touch everyone who could possibly pay, right? So the manager, the association, the individual board members. And if your contract says you cover the management company's attorney's fees, you better have insurance that does that.
Yeah, a good management contract, right, says the HOA will defend and indemnify the board for the actions that they take, right? So you want a D&O policy that cooperates with that management contract and defends the manager and the management company. And the good D&O policies that are written for HOA specifically, they will write the property manager into the policy.
Yeah, it's important because you're paying. You're paying.
Yeah.
So D&O is important to have, and I would never serve on a board, and no one should if they don't have, in my opinion, good D&O, right?
Yep.
But most of the claims that happen in an association are not D&O related. I would say they're mostly property related.
Yeah, I would agree with that. I'd say there's been an uptick in the past 5 years on the D&O, but certainly property related claims are by far the most action that we see.
And that is where the most frustration happens, I think, with insurance or not understanding it. As I think I've explained it several times in the last few weeks, because your maintenance obligations written in your governing documents are not the same as your insurance obligations. So board members cannot understand why I am not responsible, especially in stacked condo units. I'm not responsible for whatever water damage happened inside the unit because I don't maintain anything inside the walls. However, your declaration is going to say your insurance is responsible for 100% of the replacement cost of any claim. So if you submit to insurance, it's going to cover it.
Yeah.
You don't get to deny it. Why don't boards get to say, no, deny that. We're not taking care of that.
Yeah, so it's kind of a lot to unpack, right? But the first question is, the policy is written for the HOA. It ensures the HOA is an entity. Obviously, the board governs the HOA, but the members of the HOA are part of the HOA. They have a right to that policy. There's nothing we or anyone else can do to stop them from calling in and making a first-party property claim.
So you can't reach out to the insurance company and ask them to deny it.
No, I mean, and that's not our role. Their role is the insurance company settles the claim based on the facts. And if they have a proper party reporting the claim and a claim they should pay, then their duty is to pay it.
Now, we will say to them, hey, you need to go to your insurance company first.
Yep.
But if they're smart, and especially if you're in a stacked condo, because in North Carolina, we have 47C,
yep,
which makes it mandatory for you to cover water claims in stacked units. Their insurance is going to come say, nope, we don't cover that. You're supposed to cover it. as the first party insurer, right? And then it's going to go to them. Now, what I think homeowners need to know, though, is that every HOA has a deductible, and that's proceeds not included in insurance, which their insurance company should pay.
Yeah. So the association, for instance, in a townhome or a stacked condo may have a $10,000, $25,000 deductible for a pipe burst or a fire, whatever it may be. And then somebody's got to pay that, right? Or, well, they don't have to pay it, but it comes out of the claim settlement. So there's a shortfall.
Right.
So you really should be meeting with your insurance agent if you're a homeowner, and you should take the master policy and your CC&Rs to them and say, hey, here's the insurance section of our CC&Rs. Here's our master policy. Can you help me understand what I personally need to cover and where my gaps might be?
And that's the other reason why we often recommend to our boards for the condos and the townhomes to have as high a deductible as you're allowed by the documents. A lot of documents limit that. But you don't want homeowners making frivolous claims. But so if they had a small claim, their dishwasher overflowed and it ruined their kitchen floor, they could claim that on the HOA's insurance and they would get it. But if that amount was under the deductible, so if your deductible is $10,000, if it was a $5,000, it's no longer an insurance responsibility. It's a maintenance responsibility. You can throw it back to them.
Yeah, it takes the master policy out of the equation.
Exactly.
Yeah. And I think that's an important mindset shift, right? Because if you treat the master HOA policy like a maintenance policy, the result you get is going to be really bad from an expense standpoint and from the coverage you're able to get.
Yeah. I think that's the hard thing to get them to wrap their head around is like, I know we wouldn't repair the kitchen floor ever for any reason, but if it's an HOA claim and it's over the deductible, it's going to get covered.
Well, 9 times out of 10, everybody stops and they're reading the CC&Rs and they get to the maintenance and they read the maintenance and they stop.
Yeah.
They don't realize 2 pages later, there's an insurance section that may conflict with the maintenance section. And when you're talking about insurance, the insurance section is what matters.
Exactly. It's hard. It's hard for them to understand. I think the number one claim that is the hardest is the stacked condo units. And like you have a hot water heater that explodes on the 3rd floor, or worse, a fire suppression system, because those are under pressure and they just don't stop pumping water out as hard as they can. Yeah. So now whatever's happened on the 3rd floor has destroyed 6 units underneath it. How do you wrap your head around, well, I've had this happen. The reason the fire suppression system went off on the 3rd floor is one of the tenants was casting his fishing pole in the living room, caught the sprinkler head, yanked it, set the whole thing off. Like, how is that? It's an HOA claim, right? But it's negligence, but you still have to cover it. But you can put the entire deductible on that one homeowner, I think.
Yeah. So it's really tough, right? Generally, what the CC&Rs are going to say, and maybe even to a degree, the insurance policy is that we can't subrogate against the unit owners, meaning we can't go back after them. Mm-hmm. And I say it all the time, and not to imply that this person didn't have a legitimate reason for doing that. We insure stupid. And there's just nothing you can do about it, right? And it's really frustrating as a board member, especially for a stacked unit condo, that a hot water heater burst that's 20 years old, and we all know it should have been replaced at 10 years. And they're going, well, that person, they should have replaced that 10 years ago. They didn't do the
maintenance obligation, yeah.
And it's like, well, yeah, I know, but the resulting water damage is covered, and we have to cover it. So it's frustrating for everybody.
Yeah, and that's state statute because you're stacked. Yeah.
Correct, yep.
That's hard to swallow, I get. Do you think it's fair? This is how we think about it. Let's say if you had a deductible in that situation and it wasn't a homeowner's fault, it was literally a pipe break in the wall. You have that $10,000 deductible. We split it by the percentage of the damage in each unit.
You allocate it back.
Yeah. Mm-hmm. And it can't just go on one person. It just allocates back by the expense.
Yeah, and I think a lot of the CC&Rs get into that, allocating fees back to homeowners. Yeah. So I tell people that while that's probably the right idea and right mindset, it's always good to check with the HOA attorney to make sure what we're doing is above board, so you don't end up in the D&O situation. Yeah,
no 2 documents are written the same. And then do you have any recommendations or things you've seen in the industry on how to risk manage anything like that? Do you know? I don't know. We've thought about it over the years. How do you stop the sprinkler head? Once you hit a sprinkler head, its job is to pump out as much water as possible.
Yeah.
Like, are there any things in the industry you've seen where you can help try to mitigate these kind of damages?
Yeah, it's tough. And I mean, part of it is education, right? You tell the homeowners, hey, we've got the sprinkler heads. If something happens, we need to get the water shut off as fast as possible. Call the emergency line, know where the water shut off is.
That one. And nobody knows where their water shutoff is.
Yeah. So almost like you have to provide a diagram, because stopping it as soon as possible and then getting a mitigation company out there, because you do have the right to mitigate so the claim doesn't become worse. Everybody thinks, oh, I've got to call insurance and wait 3 days.
Stop. Yeah.
No, you need to mitigate immediately, especially with water. So I think a little bit of it's education and then preventative maintenance. If you've got polybutylene pipes or if you've got old pipes, you've had repetitive water damage issues, get into the root cause, because eventually the cost for insurance or becoming uninsurable is going to be higher than fixing the issue.
And we've seen that. You and I have both seen communities that I have one coming on board shortly that I think is on state insurance because
they are. Yeah, the North Carolina Joint Underwriting Association, which is the carrier of last resort in North Carolina.
Yeah.
Mm-hmm.
They just had a catastrophic claim and got dropped, and then no one wanted them after that. So what do you do? Yeah.
Yeah.
One of the things I wanted to go over too while we're here is we talked about mostly from the board perspective, but from a homeowner perspective, what do they need to understand about their policy? Like, I'm always trying to explain the difference. What's the difference between an HO3 policy and an HO6 policy?
Yeah, so HO3 is what is known as the typical homeowner's policy. So it's originally made for a single family home, detached home, but you have certain townhome associations where their documents are written. So everybody needs an HO3 and they're responsible for insuring their individual part of the building, which I disagree with. Because when you write the documents that way, it just gets really confusing. I mean, the whole roof gets damaged. What if somebody doesn't have insurance, or what if their carrier doesn't settle the way the carrier next door does?
Yeah, one replaces and one fixes. So now on one building, you have a townhome with a new roof, and there's like a definite line where the next roof just has a few new shingles, right? It looks terrible.
Yeah, or you have a fire in one of the middle units in a 5-unit townhome building, and that person's uninsured because no one's policing it. And they don't have any money to rebuild their unit, then, what are you doing? You've got 4 in an empty unit in the middle.
Yeah. No, I can think of two HOAs in 20 years or townhomes I have 3 where they have to carry their own insurance. And I don't know. You have to amend the documents to fix that, but it's hard to explain to people.
It is. And it's becoming more popular with builders these days too. And I think the ultimate reason is it makes the HOA dues look cheaper. So there's certainly an attraction there when somebody's buying a home, and it takes some of the conversation out of it. So it becomes more transactional.
And then HO6 is what you want if you have a condo or a townhome, right?
Well, so a townhome where there's a master policy. Yeah,
exactly.
Yeah, but it's known as a condo policy. So that's correct. Yep.
All right. And then there's also add-ons, right? So a lot of times it's 100% back to original construction. And then you have to do your betterments and improvements. So explain a betterment and an improvement. Yeah.
So if a lot of these condos, they were built in the 80s or 90s, right? And if your CC&Rs don't say anything about betterments and improvements, or they exclude them, and you come in and you do a full, gut renovation on your condo, you put granite counters in, you put new floors in.
Brazilian.
Yeah. I mean, really.
Wood cabinets.
Really expensive, nice stuff.
Rainforest wood cabinets.
And then you have that catastrophic event and you go, well, what do you mean you were going to build it back to 1987 specs? And if you don't have the right insurance, the person left holding the bag is going to be you. Yeah.
So you need to make sure your insurance covers your improvements and also the deductible. What do you call that coverage that covers the deductible? Is it loss coverage?
So yeah, there's multiple parts. There's loss assessment coverage, right? So you want your property limit, which is, I think, the coverage A. Personal lines isn't my forte, but I'm enough to be dangerous with it. So coverage A is the building coverage. So you have that. You want to cover your personal contents. You want to cover your loss of use. So if something happens to your unit, you have to go live somewhere else. So you want to have some funds coming in to pay for, where you're going to live in the interim. And then you want to have loss assessment coverage. So if there's an event that causes the community to assess, I mean, there has to be a covered insurance claim, but they assess back to the unit owners. You want to have something that pays for that.
Coverage for that. And then this is a rumor I heard a long time ago, but is it true that you can buy insurance in the event that your HOA has a special assessment that you didn't foresee during the year?
So it has, the loss assessment is what,
not part of a loss, just
has to be related to a loss.
Oh, okay.
Yep.
Not even like the loss was the tree fell on the pool clubhouse.
Well, that would be a loss assessment. Yeah. So there's an event that happened, an insurable event that happened within the community, and now the community is assessing back.
And not just because we want to put new roofs on the buildings.
Correct. Yeah.
Got it.
I mean,
I thought that didn't sound right.
There's probably something out there that I don't know about. You can insure anything. Now the price would probably be egregious, but commonplace is no, you don't just insure special assessment.
All right. So we just kind of talked about what do homeowners need to make sure are in their own policy. So let's summarize for the board members things they want to make sure they're looking for in the HOA's policy. And I know one of the things you and I have been talking about lately is the new wind and hail deductible issue. Explain a little bit about that.
Yeah. So when you live in a condo or townhome unit, the thought that makes sense, right, is the most dangerous thing out there is fire for us. And there's truth to that to a degree. The most common thing that happens that burns carriers up is wind and hail that damages the roofs, and carriers becoming the maintenance policy on a 20-year-old roof that needed to be replaced anyway. The way the insurance industry has addressed that, or one of the ways they've addressed it, is they've started inserting wind and hail deductibles into the policy. So what looks like a benign 1%, 2%, 3% is actually a percentage of the building limit usually. So if you have a community with 50 buildings in it, and they're all about $1 million a piece, and you've got a 2% wind hail deductible, you're looking at $20,000 per building.
Deductible if you have a hail claim.
Correct. Yeah. And so the policy that you just switched to because it was $20,000 cheaper just cost you over $1 million on an insurance claim.
And where do you get that from?
Yeah, where it was special assessment.
Yeah. I've definitely noticed in the industry 10 years ago, maybe more than that, you could submit a hail claim and they'd be like, okay.
Just replace the roof, yeah.
And now they're going to send 2 engineers and a NASA geologist.
Special meteorologist.
Yeah. To tell you when exactly there was a hailstone, how many hailstones hit exactly in that area, and whether or not they're going to cover it. And most of the time it's no.
Yeah. And the other things carriers are doing is they'll put actual cash value wording on the policy. So where you thought you were getting today's dollars on a replacement cost basis, well, now the roofs are scheduled at actual cash value or depreciated value. So if you have a 24-year-old roof that gets destroyed, you're basically not getting anything, especially after the deductible.
So you want a good agent.
Yeah.
Thinking of those things, explaining them to you, making sure they're in your policy. The other one that came up probably 5-6 years ago was codes and ordinances.
Mm-hmm. Yeah.
Explain that.
Yeah, 5 or 6 years ago, and fortunately carriers and agents have started to address it more, ordinance or law coverage. And there's actually 3 parts to it. But basically, when you have an older building that's damaged, it has to be rebuilt to the local or national codes and
current ones.
Current, yeah. So if you got a 1985 building, it needs to be built to 2026 spec. And without that coverage, you're on the hook for a lot of those upgrades.
I know you have a story. So you and I were talking about this not too long ago about the board definitely went with the cheapest insurance they could find. Mm-hmm. And then tell everybody what happened. This is a cautionary tale.
Yeah. So boat docks, obviously really tough to insure. A lot of communities have them. They sit on the lake unprotected. We had a community that decided that just buying a fire policy for their boat docks was the best thing to do. They're $1 million of boat docks because it was $5,000 versus $25,000. And I think it was within a month, a bad storm came through, big wind and wave event on the lake, and destroyed all of those boat docks. So the $20,000 savings today, 30 days later, was a $980,000 shortfall.
You can't get that back.
No.
And then no one's going to insure you really after that, are they? What do you have to do? How long do you have to be safe before somebody wants you back?
Well, the good and bad news is it didn't show up on the loss history because there's no coverage for it. The bad news is usually 3 to 5 years for that to fall off what the carriers are looking back at.
I think that too, people don't understand that too. When you want to keep, the boards want to keep shopping the carriers, is that those loss runs.
They keep churning.
They're also like, your credit app, like how many times someone searches your credit is also, it's not a good thing for your credit. How many times it's searched, right? Same thing with the insurance. It kind of works the same way. Yeah.
Your frequency. So how often you have claims predicts the severity often, or how bad your claims will eventually be, or how big one claim can be. So when a carrier sees 10 claims in 5 years, even if they're all $10,000 claims, they know eventually the big one's coming, and they don't want to be on the hook when the big one comes.
Because you're using it as maintenance dollars.
Correct. Yeah.
Yeah, I get that. Well, thank you for joining us today.
Yeah,
that was a good talk. Hopefully we explained a lot of things to people, or made it, less scary or more understandable. If anybody wanted to reach out to you, how would they do that?
Yeah, they can reach out to me via email, is usually easiest. Chuck, CHUCK .Kiser, KISER @IMAcorp.com.
So I think the big takeaway for today is that insurance isn't just a line item on your annual budget. It's your community's ultimate financial recovery tool, and the board and the homeowner's ultimate protection. Mm-hmm. The most resilient neighborhoods don't wait for a pipe to burst or a storm to hit. They understand their governing documents and audit their insurance programs proactively. If you suspect your current board is operating with an outdated add-on policy, or you're a homeowner worried about hidden coverage gaps, we hope this podcast helps you understand what you need to look for. Do you have a complicated insurance story or a question about a claim in your own neighborhood? Drop us a message using our website's contact form at mainstreetmanagers.com. Don't forget to follow Main Street Management Group on socials and subscribe to Let's Talk HOA on Apple Podcasts, Spotify, YouTube Music, or iHeartRadio to stay ahead of the curve.